A lot of people still get really confused about what they should do during a market crash. Hopefully this video will serve as guidance on the best way forward. So I would have expected that this would have been well-known knowledge by now, but people still panic during market crashes, as we are in one or heading towards one at the moment with everything going on in the world. So the world is still not fully recovered from like the pandemic problems. Now there's new wars and things like that going on, and energy crisis in some countries, and cost of living crisis, financial crisis, inflation and interest rates, and all this stuff is just going on. Bond market went up. That just really like made stocks take a hit, even though they were actually performing fairly well until recently. Part of the thing is that we had a pretty good period in the stock market. Even though these conditions around the world were still kind of going on, it's kind of inevitable that there will be like a correction every now and then, and that's just normal. Investing in the stock market is like a psychological game. At the end of the day, you do get emotional when you see your own hard-earned money like go down into negative, and you see like everything go red, especially when you were at that like euphoric high when everything was going so great. So this video is also aimed at long-term investors, because swing traders, day traders, whatever, it's like another story. For long-term investing, the statistically proven best way forward is to just keep dollar cost averaging and buying through the highs and the lows, and just consistently buying regularly no matter what the conditions are in the market. And there's several benefits to this, and before I'm going to go into that, I'm just going to say that nothing in this video is financial advice, and everything is for entertainment purposes only. One of the major benefits of buying consistently throughout highs and lows of the market is that you can also avoid getting manipulated by the news. And at this point, I don't even know who even believes the news anymore. Obviously, we need some source of information, but at least this way, if there's someone manipulating the news sources to get retail investors to sell or buy or something like that, you can at least be immune to that, because you're just buying no matter what. And it also makes your investing decisions more logical and less emotional. Obviously, you should do some research before investing, not just blindly just buy whatever, because there are some stocks that have been doing well previously, and then there could be a serious game-changing change to their business that would make it a good idea for you to just pull out of that specific stock, or to invest less in it, or to start at least taking profits. When we're talking about the major companies like Google, Microsoft, Apple, I mention these in like every video, because they're just like the basic stocks that perform well. They're solid, they handle inflation and crashes and everything really well. So generally these stocks are fine to continue buying into in my experience. For example, Google went down 8% like very recently. That's just like a great discount opportunity for me. I've been in the stock market for around 3 years. I've seen that every time I've been through like these crashes, much worse than the one we're going through like right now, if this is even a crash or whatever. I've had periods when my portfolio was really down. I would continue buying, and every time something like this would happen, it would always recover, and I would be glad that I bought during the down period. But the problem is, we all hear quote of buy when there's blood on the street and be careful when everyone's like happy or whatever. It's a bit easier said than done if you're not like desensitized to like seeing loss in your portfolio. So at the end of the day, we still emotionally feel comfortable buying more when everything's going up, and we know, and we see it the next day go up and the next day go up. But everyone's just scared when they're already down and everything. It just affects your whole mood and disposition and everything. You just don't feel like buying anything, and you start regretting what you did put in. If you've been in the market for like over a year at least or something like that, and you've been holding positions for that long, you would already have been through bad, rough periods, and in the beginning you would maybe be like panicking that, oh my god, what am I doing, am I messing up? And then after a while you just stop caring, you stop getting upset and like emotional about everything. And when you dollar cost average in like let's say the first crash, then by the time there's like another crash, your position has already moved up a lot, that even during the crash you're still like in profit, so you don't even really notice it. You might just see like your profit has gone down, but you don't see it become like from a profit into a loss. You just have to like build up a stomach for like tolerating risk and being able to see loss And apart from all this, like, the money you're putting in the stock market should always be money that you are willing to lose in the worst case scenario. So even if it's like most of your savings, that's fine. Yes, it might be a significant amount of money, but you still have to be willing to lose it if something went wrong. Like, it shouldn't be that this money, if I lose it, I'm not going to be able to pay rent, or I'm not going to be able to pay for my kids' education, or like something like that. And I guess that most people are not very good at handling their emotions or having these psychological skills for handling their stock portfolio, which could be a contributing reason to why when the market goes down a bit, it goes down even more. There's people panic selling, there's people stop losses getting triggered, like long-term stop losses that they've put over major supports and things like that, and when it passes that, and many people's stop losses get triggered, even maybe some institutions, then it just adds more and more. You as an investor can see all this as an opportunity to buy at even a lower price, dollar cost averaging lower and lower and lower, so that by the time this crash is over, you're making even more profit than you were before the crash. And you can see on this chart how, despite there being so many like recessions, when you see on this chart there's these yellow lines that resemble recessions, you can imagine that during those recessions, especially like the 2008 one, you can imagine like how much panic there was, how much everyone was fearful and scared and everything. But when you zoom out and you see like the bigger picture, it was just a very tiny segment out of your whole life, and the overall trajectory of the market is upward. So why would you panic sell when you could just be buying at lower prices and then making more later on? The only reason that would make sense is if you're like literally like, you know, in your last years of your life, and like, which, I mean, you should have taken out everything before that and enjoyed your life a bit. There's this other quote by, I think, Warren Buffett: the market takes from the impatient and gives to the patient. People who just sit through it and just wait, and they don't try to time the market, they just stay in the market, they end up taking the money from the panic sellers and the people trying to time the market, and they end up getting them at lower prices, and they end up also making more profit in the end. When you are scared of recessions, or when there is recessions, or if you think that you have a really bad stomach for loss, at least at this time, because you're new or whatever, then you want to try to like focus a bit more on recession-proof stocks or like inflation-proof stocks. So basically things like Google and Apple and things like that can always make money regardless of what's going on in the world. They are so big and important that they are still making money, and they don't go down as much as other ones. The ones that I've seen to survive in recessions the most, from my experience, are Google, Apple, Microsoft, PepsiCo. From my own portfolio, these are the ones that I've seen to survive like the most and have, say, sort of the lowest volatility. I mean, very recently, Google and Apple have both had a bigger than usual hit. I feel like that's great because I can just buy them at these nice prices. I'm not worried about Google or Apple going bankrupt. Like, these are like $2 trillion companies. For you to lose all your money in Google or Apple, they would have to go bankrupt. For them to go bankrupt, that would basically like obliterate the entire like US market, economy, everything. So like even your money in your bank account wouldn't keep you safe. Like in World War II, was it? I think it was like before World War II or something like that. Yeah, it was, I think, like after World War One, I think, or World War II. I don't know, one of the World War where Germany had to like pay all those reparations and stuff like that. Like when there's a serious problem like on that scale, everyone's screwed. Like, it doesn't matter if you had it in the stock market or you had it in whatever. In that case, even like real estate, you know, like houses were being destroyed, and not being in the stock market and keeping it as cash in a serious situation wouldn't really matter. If we're not talking about like a world war kind of situation, then I would say the best thing you could have is real estate that you fully own. You're not like paying the mortgage for it, so you're not going to be affected by interest rates, like you already own it. But that's not something that everyone has access to. If you do have access to that, you can buy something in cash, or you already own something and you can rent it out and you can increase the rent and whatever, like that's great for you. But not everyone can do that. So if you can't, then I guess, in my opinion, this is like the next best thing. You just keep it in stocks. And I think people just need to not be so worried about things that happen in the world. As much as you think they're gonna affect you, like, they don't really. Like, you know, the stock market, panic a bit and then it'll just recover. If it's something that's that serious, that it's destroying everyone's life and stuff, then it doesn't really matter where your money is. Your best thing would be to have real estate in like different countries around the world, so that if this region goes down, you're in another region. If that region goes down, you have something in that region. Setting up bank accounts around the world, like in Switzerland or something like that. But that's not something that everyone has access to. And anyway, I would love to hear you guys' thoughts on this. Make sure you leave some comments down below telling me what you agree with, what you disagree with, or if you have any questions. I'll be very happy to answer them. I'm also attaching a link below for my Linktree. It has my social media platforms. It has investment apps that give you free shares if you use my links and stuff like that. Please make sure you like and subscribe. Share this video with your friends and whatever, because I'm trying to grow my YouTube channel. I'll see you in the next video. Bye.